So hey everyone, Norm Hanawa here from Node40, and I'd just like to welcome to everyone to the next episode of the Crypto Clarity podcast. And on the show today, we have two wonderful guests. We have Perry Wooden, who is the CEO of Node40, and Ben Taylor, who is the CEO, and both guys are the founders. Ben Taylor, the CEO of Softledger. So welcome, Perry and Ben, to I think this is your first time on Crypto Clarity, especially given that Crypto Clarity is a fairly new podcast.
Yeah, Norm, you and I talk all the time, but it's first time on the podcast.
First time on the podcast. Yep.
Thanks, Norm. Good to be here.
Great to see you, Ben. Um, so I just wanted to first start with just each maybe we start with you, Ben. Just a quick intro, your background, and then Perry, you can go from there.
Sure. So my background's in accounting. I'm a CPA, started off in public accounting, did financial reporting for a few years at a big public company. And when I started Softledger, I was managing a few different areas in the accounting department for a small public company, and it took forever to get the financials each month. And I came to learn from this clunky accounting system in the middle of the close process. And so I called up my longtime friend, Jeff Ostrega, and we got to designing a mid-market general ledger system. And then in August of 2018, we released crypto-specific functionality, which is kind of how we got into the digital assets realm of it. And yeah, we've been steadily growing ever since, and excited for the conversation today about how we partner with Node40.
Awesome, thanks, Ben. Perry, a little bit
Yeah,
about
you want
that.
mine too? Yeah, so I mean, Ben and I have sort of been building in parallel. My background, software engineering, my co-founder's background, software engineering, that's Sean Ryan. We started in March of 2015 as a staking company, and we realized our clients would need some sort of financial reports to understand what they were doing, and that we would need them for our accountant and financial advisor. So we built those tools internally, just really for us to understand what was going on, and real deep dive into transaction analysis and the operational context for those transactions. We fell in love with really analyzing transactions on chain, and in 2018 made the decision we were going to focus on that exclusively. We ended up getting rid of the staking company to really focus all of our efforts on providing really robust data for consumption by other platforms like a soft ledger.
Great, awesome. Okay, and I think as one may have seen from some perhaps clippings, we're going to talk about a partnership between Node40 and Softledger. But before we did that, I wanted to be a little more technical in this podcast. My background, as Ben and Perry know, is more in the tax area. I was at this also at the Big Four firm like Ben for a while, specialized more in tax. So Ben, I wanted to get maybe a little more technical from an accounting standpoint. What exactly does Softledger do? And for this is for because our viewers here are crypto people. They may be accountant and tax people, but they may want to understand what is this accounting ledger and how does it help companies in the crypto space?
Sure. So I think the best way to think of us is we are a mid-market general ledger system, like an Oracle NetSuite or a Sage Intacct, with a crypto module. So we have native functionality to handle digital assets. And why that's important is you have when we initially built or tried to handle crypto in our system, we have an inventory management module. It doesn't quite work in there, and so there are some aspects of crypto that involve tracking cost basis like physical inventory. But what we found is these assets are moving around kind of like cash, but they need to be tracked like inventory. And so that really requires its own set of functionality specifically for crypto. So we created this module for companies that have to deal with this deeply in their operations and generate financial statements. That's kind of in summary what we do.
Okay. And Ben, whether the crypto or the digital asset or non-digital asset space, what are the types of customers that are coming into you? I know you've
Sure.
mentioned before, like multi-entity,
Yep.
cross-border. What are the types of clients that really look for these types of tools?
Exactly. Yes. So, yeah, broadly, multi-entity consolidation, foreign currency management, and then digital asset management. Those pieces of functionality are typically one or even all three of those pieces of functionality are typically what our customers use. Industry-wise, what that means is it's usually a software company, financial services, or investment management company those are the top industries anyway. But it really is, we are a general purpose platform. We kind of cover a broad range of industries, and that includes, you know, crypto or digital assets. Isn't really an industry. Included in that broad range of industries is different types of organizations within the digital assets realm, and I guess layer one foundations, miners, financial services companies like exchanges or other crypto financial services companies. There's a lot. It could keep on going on the types even within digital assets.
Okay. And Ben, what's just you mentioned a little bit of like mid-market and Nets. What's the difference between Softledger and NetSuite, QuickBooks, Sage, all the other companies out there?
Sure. So for a company outgrowing QuickBooks, and it could outgrow them for a number of reasons, but it usually comes down to volume of transactions for that company. It's at some point you need to start tracking departments, and need to start having controls. You're going to get an audit. Things need to be immutable. That's at the point where you're looking for that next step up to a mid-market system. And at that point, you look at NetSuite and some of the others out there, and it involves a whole protracted implementation. You probably have to beef up your team size, all the stuff that comes with it. And the thing with Softledger is you can keep the same team, you can do everything you're doing now, but just with the controls needed to serve as that next step up.
Oh, okay. That's a great explanation of some of the differences between, like I didn't the mid market, the QuickBook, the smaller market QuickBooks, and then sort of in being in between what you may need for a full-on implementation for NetSuite, etc. Okay. So Perry, Ben mentioned a bit about the Softledger platform. Can you give us a little more of a description of what does Node40's platform exactly do?
Yeah, so Node40's platform takes all that data from these exchanges or from on-chain data itself, and then we apply operational context. So what was that transaction? What was the intent of that transaction? And then what were the economics behind that transaction? Now, the reason that's really important is because uh, most of this stuff was written by like software developers, right? They don't have the kind of background that you and Ben have. So when they're thinking about building a new financial vehicle on chain, or they're building something, some new crazy thing you can get involved with on a centralized exchange, they're not coming at it from the perspective of, well, how are we going to account for this? They're coming at it from the perspective of, what are my limitations from the technology right now? And that's it. So there are no naming conventions. They will allow you to do disparate things within the same transaction. And you have to break all of that down so that it can be categorized appropriately. And somebody like Ben can take a look at it and say, well, I understand how to map this to an accounting language. And so we do that. So we abstract away all of that craziness. And Norm, you've heard me talk about this before, but one of the books that's really hot right now is Chris Dixon's Read, Write, Own, and
Yeah.
he talks about the parallels between the internet revolution 30 years ago and what's happening in blockchain now, and people are just ill prepared for it. But there is so much efficiency that can be gained by adopting blockchain technologies or getting into tokenization of assets, that it just makes sense for us to kind of dive headfirst into it. And then companies like Node40 and Softledger figure out how to allow companies to really be compliant and have a full understanding of what they're doing in the space.
Awesome. All right. That's great. That's a great explanation, Perry. So, Ben, did you want to comment?
Yeah, no, I completely agree. I think we early on we were looking at how do we solve this, and you could keep on building integrations with different uh exchanges and protocols forever, and and we realized there's no way to we can't do our piece and that piece as well. And so it was what we were very excited to partner with Node40, is that's a whole huge initiative on its own, and it really takes the combination of the two to solve this problem. And it's really, yeah, that context is so important. The standardization is so important to get everything efficiently through the system into financial statements, so that we can utilize this great technology that's coming down the pipe. Yeah, the innovations are what they are, and it makes sense that accounting wouldn't be the first thing on your mind as you're building these new protocols, but hopefully it's not the very last. Otherwise, it might be difficult to actually get that transactional data to show what the financial impact of that is downstream.
Right,
Yeah.
right. I mean, it's a growing space, right? But you still need to prepare the financials for your investors, your shareholders, and for your own internal CFOs or accounting people, just to know what how the business is doing, what the projections are, how are we going to grow, where do we need to provide address capital deficiencies, etc.
Norm, I want to jump on what Ben said, because part of the attraction between for this partnership was there were so many philosophical synergies between the two companies. Ben said we want to focus on accounting. We took a look at the digital assets, and I think, well, I'll speak from Node40 side. We took a look at the accounting needs and said if we dove into that, our product would suffer. And I think there aren't a lot of companies that really take that approach of saying, how can I make what I do, what I'm really good at, be the best product on the market?
Mhm.
And by spreading yourself too thin, you're not able to keep up with what the requirements of your clients. So Softledger said, listen, we're really good at what we do, so we're going to focus on that. And the same thing with Node40, we're really good at what we do. That's this data analytics for blockchain transactions. So find somebody that knows how to get that into the general ledger so that we can work together, and then solve the needs of our clients without frustrating them.
Yeah, couldn't agree more. Yeah, I think it's very complementary in that way. And yeah, the upshot of all this is that if you want to engage in this new complex business model, you can, or you can at least assess and say it may get to be the point of, oh, well, this actually is too many hops between these transactions. There's too much going on. I don't even know how I could do this, but I won't even know how I'm performing. So it can get to be the point of actually informing some advice on, okay, if you're going to do this, do it this way instead of just kind of getting into whatever protocol, trying to do some arbitrage, trading, whatever it is, and not really knowing what you're getting into. There can actually be a little bit of uh, advising and maybe sharing some best practices for the best way to do that business if you want to track everything properly.
Yeah. That like the advisory, I think is where we can also bring a lot of that kind of that intuition, because right now we will see clients who say, oh, I don't want to do that again. Like they see the end result of pushing a button, and the end result is way more complicated than they assumed, and now they have to deal with that. And so we can then start to advise them on, there are other ways to accomplish what you're trying to accomplish. Maybe this particular interaction with this particular smart contract is not the way.
Mhm.
Yeah, so let's let's take an example. Let's say you have a miner or an exchange, right? And they come in and they say, "Hey, multi-entity or cross-border or whatever it may be, right? Right, Ben?" And
Mhm.
they need um, they need their accounting books taken care of, right?
Mhm.
Ben, what were they doing in the past? Just out of curiosity, like what were you seeing where that kind of fostered this partnership?
So there's a lot of questions to, yeah, so you're mining. Okay. What what are you mining? What are you using a mining pool? What platform are you using for that for? What's your stance on when the mine funds are earned and where are you going to pull those transactions from to do that? And can you pull those transactions? You know, if you can, then it was probably in a CSV file and you were doing something in Excel. Maybe you were using a consumer-focused tax product to try to get the transaction standardized and then come up with what the journal entry is to get it into to QuickBooks or something like that. Something like that. I mean, it depends on what the reporting requirements are for what that process looks like. Generally, is what we see. Um,
And in the past, what were the big problems, Ben? Were the reporting, they were doing it almost like somewhat semi-manually, right? With some rudimentary tools or
yeah,
even tools. Were the reports flawed? Was it just the process inefficient? Were they getting incorrect results, not really be able to provide the correct reports for their internal, external stakeholders?
well, I think probably the worst part was they had no idea whether it was right. But let's say it was right. They got to an end result that was right. There's so many manual steps in the process that it's time consuming. They don't know how, they definitely don't have it right timely. And then it's so error prone throughout the way. So you could easily make a mistake. And if you get to the end, you have this number and you don't have a lot of confidence that it is correct. We had that early on. I don't know if Perry, you experienced something similar where we'd say, okay, let's implement and we can help. Let's go through the process of implementing. And they were pretty upfront with that they wanted to check our number against theirs, not because they wanted to make sure ours was right, but they just wanted a second calculation at their number to see if they were even in the ballpark.
Yeah,
Yeah.
and in fact, that actually is actually one of our sales pitches. Is we will generally hand over a public address that we find like on Etherscan.
Mhm.
We'll plug that into our platform to generate a report, and we'll say, do your own analysis on this and let us know what you come up with. And then they can compare apples to apples. Norm, that the mining question I find interesting because there's so much depth and complexity that I think people gloss over, and we see this a lot with specifically with miners because it's easy entry, right? You don't necessarily need to have a huge technical background to get into mining. You're buying these mining machines, or maybe you're staking, and you're getting some kind of yield. You're getting some kind of reward. There are a lot of questions, as Ben laid out, and there are a lot of ways to um, do the reporting. So miners are receiving some sort of reward at a certain block, so a certain date and time. And as Ben said, do they have dominion and control over that? Is that going to be the determining factor over when you decide the cost basis? Mining can be complicated because some protocols require 100 confirmations before you can do anything with that. So do you change your cost basis then? What do you do if you're mining directly to where the rewards are going directly to an exchange, and your accounting methodology is FIFO versus sending it to something that gives you some transaction control, some coin control, where you can then start to select various basis on disposition of these rewards. Like there's a whole lot to unpack. And when you have two companies like ours getting together and fully exposing the data, it really gives companies the ability to make informed decisions about what they want to do next.
Yeah, I mean, mining to me was a good example of like the really one of the first, cryptocurrency examples where you could, you buy, sell, and mine Bitcoin. So I thought it would be a great example of how does this all work? Like you said, like the miner on top of it all, you have all those basis issues, you have the
Mhm.
different lots. You also have the miners selling some of it. They're incurring fees and they're selling some of this to pay for power costs, possibly, if then depending on their fiat
Yeah.
reserve. And all of a sudden you have all these accounting issues you got to track.
And to your point on what were they doing prior, Norm? Like if you're trying to figure out how to wrangle this all together, you're not. Imagine you had that all transparently and had tracked, and your starting point was looking at it all and deciding what to do. That's really what the solution that they need to get to, and then you can start making informed decisions, being more using that data to move the business forward, as opposed to just it being an exercise in compliance and trying to just get everything together at the end.
Right. You've increased efficiency, right?
Mm.
You think you also have much more correct data, so you can start making more informed decisions, and you've lowered risk in a way because you're not relying on Joe and Ann in the back office putting all this stuff together, and then Joe and Ann left. Now you got, you basically have you have resources where you're gathering the data directly from the blockchain or the centralized exchange or whatever it may be.
Yep, exactly.
And I think Ben's also touching on the difference between accounting for compliance, like you may have tax obligations, and business accounting. Those are two very different things. And it's the business accounting that for our customers, they usually come in the door because there's a question about compliance and liability. Once you've addressed that, then you can start to say, well, now you can start looking at this from a business accounting perspective. And that is just so powerful. Again, I think this is where Softledger kind of, allows for that transparency so that people can make the informed decisions.
And Perry, can so this sounds great for the industry, right? Like the digital asset industry, which, as Ben said, it covers really multiple types of industries, right? Effectively within it. Perry, you mentioned earlier, like each company is concentrating on its strong points. How does that help? How does that help the partnership compete against other players in this particular space that already had some of these accounting integrations in place? What are the big strong points of this partnership as compared to those?
Okay, well, from my perspective, there are other platforms that are digital asset platforms that are also doing the accounting integrations, and that seems to me like accounting in general is much more complex than maybe people give credit for. So you have to understand just accounting in general. Then you have to understand what are the directions that a business wants to go. And on top of that, you have to understand the complexities around digital assets. Now, digital assets are new enough that most of the companies in this space are relatively small. Like when we look at more established companies, the big players in the space are massive. And sure, there's Coinbase in our space, which is large. But all the rest of us, we're still small, and we need to really focus on one thing and do that thing really well. So that's why I think it's really important that Softledger and Node40 are focusing on the core competencies, because as soon as we try, if I was to try to compete with Softledger, I'd have to build Softledger, right? So now that's a business in and of itself. If Ben wanted to compete with Node40, he'd have to build Node40. And that doesn't allow you to be a flexible startup. That doesn't allow you to be able to move rapidly in the space. Because we are just focused on the data that we get from exchanges and from the blockchain, we can move really rapidly because that's where our domain expertise is. And I don't want to spread out and have to do many things poorly. I want to do one thing really, really well.
Yeah, I couldn't have said it better. I mean, that's it. It really is. It's complicated enough problem that trying to do both the data aggregation, ingestion, standardization, and accounting, all of that together is just too much for one business. In our view, it being two separate businesses makes perfect sense. And then even to take that a step further, we signed a customer together, Node40 and Softledger, where it's us plus them plus another general ledger. So we're just handling the digital asset side. It's a larger organization. That's where this makes sense. but that is the best solution, is having we designed the, I think one of the key differences in how we've approached this is, I was doing corporate accounting when we started the company. So when we built the crypto module, it was this is if I was a corporate accountant dealing with this, what I would want to use in my job. And I think that's really the difference between it being kind of an afterthought of, okay, well, we did the data aggregation part. It's really complicated to get this into an accounting system. Let's just build accounting. And it just doesn't work, I think. And so this is the solution. And you probably don't want to, if you were hoping for one vendor, you probably weren't hoping for two. But this is the solution that will actually work in that case. And I think that's really what it comes down to. And it's not something you can just try to flub it and jam it through, and over time it'll work itself out. It won't necessarily. I mean, hopefully you can get there eventually with some other stopgaps, but it's a difficult problem to solve.
Yeah, I mean, I'm not Chris Dixon or some of these sages, but I as more of a person in tax and accounting background, being Big Four prior to joining NODE40, someone almost looking at it from the outside, like you hear all this stuff about, hey, the blockchain, it's going to be the new accounting ledger, and it's not so simple. It sounds, there's so many conceptually great things about blockchain, but there's still like the implementation phase that needs to take place. And someone needs to analyze all that. You need a data company to analyze all that data, because like you guys said earlier, you have this blockchain data that needs to be indexed, normalized, analyzed. You have centralized exchange data that's not even standardized itself, right? You almost need a standardization now system to come into place. You need companies to almost self-regulate themselves with like an industry standard. And you need to bring all that together. And then on top of all that, from the data, once you got the data down, you need to somehow get this into an accounting ledger that makes sense for the companies operating in this space. It's not a simple exercise.
Agreed. And we're also seeing, I mean, we are seeing upticks in adoption, right? There are cool things that are being built. And one of the questions that like friends and family will ask, because they're following this and they're like, oh, it's much easier to do this now. Is that going to make your job less useful? And the answer is absolutely no. The back office work is going to become more and more complex, which is typical when you see disruptive technologies, right? The adoption may become easier for the end user, but then the back office requirements become more complex. And that can be simplified for organizations to deal with because companies like ours are abstracting away that technology. But this is going to be, for the next 10 years, I see things getting more and more complex for the back office.
Yeah, absolutely. And I think that the interesting thing, which really hasn't happened as there's more economic activity on these blockchain networks natively, that's where the systems start to change, and where there's a lot of different things you can do with automation directly from the blockchains. And we've barely scratched the surface with that so far. So yeah, as more adoption happens on specific chains, as new use cases emerge, that will take some time to piece together. Supply chain, for instance, has been talked about for years and years and years, and what blockchain can do there. And we think that there's a ton of potential there. It's a complex thing to set up, where there are different chains for different ecosystems that connect to one another, and there's handoffs, and when does the financial impact get triggered, and when does it change? All this stuff, it's not like flipping a switch. This is enterprise software getting converted to blockchain and related technologies. It's going to take some time, but yeah, the complexity only goes up, and the usefulness in automating this it just gets more and more valuable.
Yeah, the enterprise software going to blockchain is right. And then you have to close the circle, because what ends up happening is the people responsible for understanding what the business does, they're relying on the same types of financial reports we've been using for decades now, and those aren't going to change. There's no reason for them to change. Those reports are really good at telling stories about the health of your business.
Yeah, great.
Yeah, it's tough. Like there, first the reports were developed a long time ago, and they have, there's a lot of reasons for the development that way. And on top of it, you have regulatory systems that move, as we can see, a lot more slowly than some of the technology.
Yep.
Yep.
So guys, there's some really cool statements about the future. What are we? I know, and I mean, this is not probably people can probably tell. Like the partnerships, we've kind of gone into this partnership a couple months ago, right? And we just announced it. What have we been doing? Like, what do we have any customers that have been on board? Have there been some success stories in respect to the partnership?
Ben, I'll let you maybe take the clients because you're I think closer to that. But before you do that, I will say that yeah, I think we started talking about this partnership in January, and we were gonna handle it. Well, we say it all the time. We're gonna crawl, walk, run. Right? We're gonna take this really slow and then build so we're doing it right and we're not missing anything. I think the overwhelming sentiment from some of Ben's clients was, we need this now, so just start running. So I don't know, Ben, you can maybe talk about what that looks like from your perspective.
Yeah, it's almost immediately after that in February, we closed together a large cryptocurrency exchange based in Mexico, and they were the problem. They had some pretty sophisticated needs. They have several different businesses, and we helped automate the exchange business in conjunction with NODE40 into, they're using NetSuite as their general ledger. And so it was just kind of, yeah, it moved quickly. And I think that that's a testament to how much of a need there is and how valuable the combined solution is, that that we were able to get that in place so quickly. And there's a number of other prospects that we're talking to right now that are pretty far along. And this is, I mean, that's pretty quick, if we're talking about, we announced the partnership in March. We started working on it really in January, and it's moved that quickly. Yeah, I think this is exactly how you want it to go. And yeah, you always kind of maybe hedge it with a crawl, walk, run, because how things take time. But this one actually just kind of fell together quickly.
Yeah. I think that's a theme, right? That everybody wants to move quickly, and they just simply don't understand how complicated this is. So they want to move quickly. They think you should be able to move quickly. And then we go back to them and we start asking questions, and they realize, oh, we really missed something, or oh, this is really complicated and we need to put some thought into it before we give you marching orders. But I mean, we certainly saw that since the beginning of this year, as clients would come in and say, oh, we need this report and we need it done right away because either we have quarterly taxes or we're going to undergo an audit, and they hadn't taken the time to understand just the complexities involved, how those reports need to be given to them, and often that they may be interacting on some sort of new protocol that nobody's really had time to look at yet. So you need to take that time to evaluate it and provide guidance on how you think that should be booked.
Yeah, I think the exchange is a great example. They've got, like you said, Ben, multi-entity, probably cross-border issues. They've got payroll, they've got all these things, and then they have a significant volume, right, of data that needs to be processed.
Yeah,
which is a big problem that we see all the time in this industry.
Yeah, the multi-entity and it kind of cuts across both. We've found, interestingly, it's if you're engaged with digital assets, chances are you have multiple entities in your business. And then even more just broadly outside of that, the world has become more distributed in terms of where businesses are operating, especially with remote work and everything else. Like that's just happening anyway. And so it kind of it interestingly cuts across our entire customer base.
Okay, so we've got some cool customers. Ben, like you mentioned, like the Latin American exchange is
Mhm.
the data from Node40, putting it through Softledger and integrating with NetSuite. What have you heard anything about the results? Like, what are they doing with it now? Like, what is the real use cases in terms of the CFO doing analysis, projections, planning, etc. Whether it's that company or others?
Sure, it's just maybe boring to some people, but I'm excited about just getting them financial data sooner so that they can make informed decisions and provide uh, the good financials to management, to the rest of the management team, to help them decide what to do next. That's really it when it comes down to it. It's just providing financial data to the stakeholders that need it in the organization as fast as possible. Until that's sped up to be as close as possible to real time, there's always more automation to do. And so that's really the goal. Is just let them know exactly at a detailed level what the financial implications are of their business, and then they can decide what to do with that information quickly.
Okay, right. I mean, you got the financial data, and now you can start doing an internal analysis on your cash flows, your
Yep.
projected expenses,
Mhm.
yeah, payroll issues, all that kind of stuff. And then you've got report that could be submitted to your auditors. You can
Yeah.
start to use them and have tax analysis done, all that kind of stuff.
Yeah.
So
Sometimes you don't know. Something. Let's say you're closing the books on January, and it takes 3 weeks. Something could have happened on January 10th, and you don't really realize the impact of it until 3 weeks into February, when it all comes through the whole process, and you look at your financials and go, man, like that's the longer that takes, the more that type of thing can happen, and you may have made a different decision if you had that data on February 1st.
yeah, it's
Hmm.
uh, we get that all the time, right, Perry? The data is constantly changing, and
Yeah.
we have people come in all just even for tax planning, like sometimes they come in sometimes and say, "Hey, I got to get my 23 stuff done, but I also want to look at my 24 numbers and start doing loss planning, etc."
Oh yeah, that's true. Yes, on the tax side in particular, that's yeah. There's a lot, I mean, on both sides, but yeah, like that. You you can't plan plan if you don't have the historical data to use as a starting point.
Well, Perry and I were in a great like exercise. Even we've been in an exercise recently, Perry, in terms of our sales management process, like thinking through like once the data set, once your accounting is set, here are all the other opportunities for various service providers to do advisory work, analysis, tax work, etc.
Yes, so much. And that's going to bring another massive change to the industry in general, is because there's all this crossover where you can start to upsell on different services. We're starting there were news articles all Q1 about PE money coming into the accounting space because they're seeing, hey, there could be a lot of cross pollination here.
Mm.
And with sort of traditional firms, they may not share clients who need specific needs. Like that's their client, and it's going to stay within that silo. But that's going to change. And if that's going to change, that means we need to have data that is robust and has enough context that it can be used across these various service industries.
Right. Oh yeah, that's a good point. You don't know what somebody's going to use it for downstream, so you want to make it
Yeah.
as complete as possible.
Right. And I mean, that's what we saw when we first went out to the market and we tried to sell our solution. We said, hey, this could be used for tax. Well, I mean, turns out most firms don't really care that much about it. They don't make a lot. There's not a lot of margin on tax preparation,
Mm.
but there is in advisory, there is in BPO, there's other opportunities there. So if you're decorating, again, if you're decorating that data to the point where it can be used across the board, that's important. So it goes to don't don't just pigeonhole yourself into the data that you're providing. Make sure that you're telling the full story
Mm.
of what folks are doing in the blockchain space.
Yeah, I used to when I was in tax, I did a good amount of advisory work, and I actually I was pretty good at modeling and trying to our planning strategies, and the models would be worthless if the company's data wasn't actually correct and they were giving me financials that were completely flawed. Because that's you're projecting tax benefits, and at least tax advisory projecting tax benefits that could be completely off if the data is wrong.
So
Yeah.
Norm, I don't have an accounting background, but it seems to me that at least in with blockchain transactions, you said part of the problem in advisory was if the data was wrong. Well, in blockchain, as long as it reconciles, if the data ever wrong, maybe what you want to do with it can change, but as long as you reconcile it, is the data ever wrong?
It shouldn't be.
Yeah. I mean,
Yeah.
that's what I love about the space.
Right. Yeah, but it does need the context, the right context. That's yeah. The under yeah, but yeah, the transparency of what's on chain and yeah, and it's by design immutable is great. I mean, I think that there's just so many possibilities as for moving around financial uh assets and other transactions that need to be uh there needs to be some certainty that they're correct, and where you know the various parties involved don't necessarily need to trust each other. That there's some really interesting possibilities that come.
Let me ask you guys a question that's kind of interesting to me in a way from the industry standpoint. Like I talked about some of the tax planning and because we had numbers that developed over decades, right? Like over processes that are developed over decades. So how does the industry, what do you guys recommend to the industry in terms of it getting to the level where it's preparing books that are similar to Microsoft or whatever? Like how do they get to that? I mean, because it doesn't seem to be the case. It doesn't seem to be, I'm not talking about some of the largest players in the industry, but the middle market segment doesn't seem to be getting to that stage based off what some of the stuff I'm seeing.
I mean, I would just approach it as you would other data sources, other businesses that you're depending on how deep you're getting involved. It could just be a data source if you're just accepting payments in digital assets. But if you're incorporating into your business, just assess it like you would any other business, and then look for the tools that can solve your problem in that way, as opposed to getting enamored with the idea that somehow because of this being decentralized and on a blockchain, there's some push button, it will magically be different. There are some benefits, and it's important to understand. There's a lot. It's important to understand what those are, but to be realistic about at the end what you need, what the right solution is to solve it for right now. And given that that's going to change as things evolve. But yeah, the thing I'll finish with there is generally if there's something innovative and new that requires new software to account for it for businesses, the new software is not going to exist for a while. So if it seems like it all of a sudden magically does, then just be cautious and make sure that it really will solve the problems that you have.
Yeah, I like that. It's so easy to get into a mess in this space. We see new businesses, especially accidentally commingling funds like that. That wasn't the intention. And I think it comes down to this space is moving so rapidly. Some of the folks that are getting into it aren't used to process
Hmm.
and they just don't have it in place. And that um, a business absent process is going to run into problems no matter what. It doesn't even matter if they're a digital assets company. You have to establish that. So I would like to see more of that. I think we will. Norm, to your point, the big guys are already doing that. That was just within their nature.
Hmm.
But the new folks coming on the scene who just want to get into the space because they've got a cool new idea, they just start off sprinting
Hmm.
and then they have to apply process later, and then somebody like you know well, all three of us have to help them understand how to untangle the mess.
Yeah, Perry, I've seen it even in even some of the middle market segments that like Ben was talking about. Or there's still like client the other day came in and the data's they're missing data, and they have data from other sources, but it's much more rudimentary data. And so we're working off that rudimentary data. And if it's incomplete, it doesn't provide the details you may need for an auditor looking at your data, et cetera. It happens all the time. They started off with some sort of platform that they used 5 years ago, and now it's like, okay, what am I going to do, because I need to have this? What am I going to do, because now an auditor wants to look at it?
Yeah.
Yeah, Sean and I used to joke around even back in 2015 when we were doing the staking and we were producing financial reports about, what kind of yield you were getting. We would have customers say, "Oh, can you pull that out, because that's from my mom's wallet?" And we're like, "Ah, well, this is going to stop, right? People won't be doing this in the future." But sure enough, I mean, we still have those pop up now, or people are like, "Well, that was my brother's wallet," or "This is my mom's wallet," and it's now integrated into the business. How do we remove that? It's process.
Yeah. That's I think it's a great point. The process element of it is just something that can't be overlooked. A lot of the same business processes that have existed forever, maybe they just look a bit different, but you need them in order to get this down correctly.
So, guys, let me turn it now to the real fun stuff. You guys mentioned some conceptual ideas like tokenization, real world assets, NODE40 Softledger. What is any plans for the future? The partnership was just announced. How do you guys see this going in the future? Let's just start with more short, medium term.
Oh, well, I know short term, well, the short term affects the medium term and the long term, and that's just more seamless automation, so that whether we have a client or SoftLedger has a client, it's just really rapid for us to be able to do this integration. And they may not even necessarily need to know that we're using each other. So the ability to share the data in any direction to meet the needs of the client, I think that is something we talked about from day one, and it's something we will continue to build towards.
Yeah, that's doing that is so we know that we have a great solution for a lot of different types of businesses. Making it as easy as possible for them to get on board and see the value from it, I think is now the key. So getting that process down and repeatable and yeah, it's malleable and how that happens. Whether like Perry was saying, whether we're behind the scenes or Node40 is or whatever it is, however the case is that best solves this. That's what we're interested in.
Yeah, and Norm, like the biggest compliment I can receive, and we've seen this now a couple of times because of the way we work with other providers where they're consuming our data. The data and the way you can present that data, it's almost like handwriting, right? If you know somebody's handwriting, you know who wrote the note. And so we have had accountants, I've had accountants reach out to me and say, "Hey, your name isn't on this report. Node40's name isn't on this report, but I know that's your data." And that's just like, that's a heartwarming moment, because it's validating that it's meeting their expectations. And in some sense, it's becoming the standard for how you should do reporting. So like, that is something we also want to continue to push from the Node40 side, is really leading that standard, so everybody becomes used to it, they accept it, and then they just say, well, this is the most efficient way to operate. And well, I know as a Node40 plug, Ben, you're also working on standardizing the way this stuff is presented.
Yeah. So yeah, thanks. Exactly. We've recently announced something, the Digital Asset Accounting Coalition, and the goal is really this is meant to be a community-led endeavor that we're working with a crypto accounting group and Cavu Securities are part of the initial launch, and we've been talking about with Node40 as well, and other other industry participants. This is really meant to be open to anyone to provide feedback, and ultimately what we want is to have, this is the standard for any protocol, any network, any exchange, to provide that certain level of data, so that any accounting and finance users downstream can consume it. And so it's a little different than some other approaches because it's just it really is more. It looks a lot more like a technical standard, like computer science technical than accounting technical, because our thought is we need to get there first, and then everyone can layer on. Okay, how does a mining transaction work on Bitcoin if there's a pool involved? How does it work if in this other scenario? How does a certain DeFi transaction work? And so that's yeah. So, but the theme is a way to standardize. So yeah, this is pretty recent, and Perry and I haven't even had a chance to really discuss it, but we're hoping to converge and really end up creating a standard together that can move the industry forward.
Yeah, it just cracks me up how our minds think alike, that Ben, you and I just sort of kind of are going down the same paths and may not even know it, because Norm and I have been talking about internally about, well, how do we push a standard? And then a couple weeks later, you send this email and like, hey, we've started this. I'm like, this is fantastic.
After that, I actually went back and I caught a bit of you and Sean talking to Gary Cardone about it. And it was the same thing we were talking about. I didn't even realize you were having that conversation pretty much at the same time.
Yeah.
So, yeah.
Yeah. And that's right. That's the way technology evolves, right? We're all going to have the conversation at the same time, because it had to build us to that point.
Yep.
So it's just fascinating the way things unfold.
For sure.
Wow, guys, I'm excited. I mean, that was I love hearing about the whole standardization bit at the end. That's great. And I saw some of the stuff. I saw some of that on LinkedIn too, on your side, Ben. So that was a really cool announcement. Guys, I'm excited. This partnership has so far been great. I think there's some really cool stuff coming down the pipeline for both Node40, Softledger, and the entire industry. And look, guys, I look forward to seeing you. I know a lot of us are remote, but I look forward to seeing you guys. Ben, you'll be at Consensus, right?
Yeah. Looking forward to it.
Awesome. All right, guys.
All right. Thanks, Norm.
Thanks. This is great.